Hello guys, welcome to another episode. Today I'm going to show you how to trade with a fair value gap strategy. So before we dive into the video, I want to show you what a fair value gap is and actually how to identify fair value gap in the market, then how to trade fair value gaps. Okay, so actually fair value gap, it occurs when there are inefficiencies or imbalances in the market, or when the buying and selling are not equal, right? So how to identify fair value gaps in the market, right? So here, fair value gaps, as we said, they occurs when there are inefficiencies in the market, right? And we use only 3 candles to identify our fair value gap or imbalances, right? So here, let me show you. For example, if I have this first candle here, for example, this first bearish candle here, so let me change the color to black, right? So if I got that first bearish candle and this third one, right? In the middle there is that what long bearish candle, right? That means the market was rapid, right? So we consider the gap. So here we are going to consider the gap between this candle and this candle, right? The gap between those 2 candles, it is what we call imbalance, or it is a fair value gap, right? So let me show you another one here, right? So there are very many fair value gaps, but also I'll tell you how to choose the profitable ones, right? So if you go here, you'll see that we have these 3 candles, right? There's this one. So you indicate at the open of the other candle, and actually let me say the close of this week, right? So after that, you will see that there is that gap. That's what we call imbalance, or a fair value gap in the market, right? So actually, after identifying or after knowing what a fair value gap is, let me show you how to trade fair value gaps, how we can use our strategy. I'm going to share with you to trade fair value gaps. So first, after coming to your chart, you must identify the trend, right? The trend, is it bullish or bearish? So after coming to your chart, for example here, you will see that my chart is bearish, or the market is selling, right? So cause the market which is selling, it must be breaking lows, or even you can identify by drawing a trend line, right? This one, you must see that the market is bearish, right? So after identifying the market direction here, let me say here, right? Here the market, it broke this low, right? Then it also came here, it broke this low. Then it also came here, it broke this low, right? Then so the market was breaking lows, right? That means the market is bearish. So how do we trade this fair value gap, guys? Okay, so after identifying the break to the downside, for example this first one, after identifying this break to downside, right? So if you identify that there is a break to downside, you must look you must look for the higher low that made the break of structure, right? So here, if you see very clearly, you will see that this is the higher low that made the break of structure to the downside, right? So that is the higher low that made the break of structure to the downside, right, guys? Okay, so as you can see here, there was a break to the downside. So after identifying that, means here you also draw your fair value gap. For example here, if you look very clear, as we said, between these 2 candles, the other one and this downer one, right? If you draw your fair value gap here, you will see that the market will come and retest your fair value gap, then boom, it will go down. Okay, so after that you go to another example. So you indicate your breakout structure. You see that this is the higher low, that is the breakout structure. After identifying the higher and the breakout structure, then you come and indicate your fair value gap. For example, here there was a fair value gap right here. Okay, so there is fair value gap right here, and also you will see after identifying your fair value gap, the market will just come and test it. Then you get your confirmation. After that, you just enter, then boom, market will just go down. And also after there, you must first see the breakout structure, then you identify that made to that breakout structure, you indicate your fair value gap, then boom, you go. Okay, so you do that consecutively and until you get your good trades in the market.